Alright everybody, Stocks by the Numbers, welcome back. Quick update here on dwave Quantum Incorporated, ticker symbol QBTS, listed here on the New York Stock Exchange. The stock has kind of been bouncing around basically since like the last year or so that we've been kind of keeping an eye on it. I've been trying to update you guys occasionally on some key levels I was watching here. We did an update over here mid-September, another one I think here in October. We mentioned we happened to come down and hit these lows of 60 cents. I was personally looking for, actually went a little bit lower, down to about 57. Then you can see we bounced. We tried to get back to this key level here of 109 that I drew out. And you can see multiple times the stock tried to retest that level, ended up rejecting, coming down, spiked right back up to that level. Then we had a big gap up and we ran up here back to the top line resistance of this trend that we've kind of been in here, this kind of long-term symmetrical triangle, it looks like. This trend line I drew out last time, and you can see we ran up right to it, then we started channeling downward, did another update right around here, basically saying I believe that, in my opinion, we need to start seeing the revenue coming in, or we need some sort of outside catalyst, right? I forgot what stock we were looking at recently, but they got like a multi-year contract from the US Air Force. You guys remember that? So that's what I mean. A company like this right now, we're talking about quantum computing. We're still talking about the state of infancy of the business. I think they're bringing in like a couple of mil. Yeah, see, we're bringing in like 2 million, 2.5 million in change a quarter. Technically, we are missing estimates more times than not, but a company like this, even though in the numbers we could make the argument where, yeah, like it could tank all the way down to like 30 cents, 20 cents, and it could actually be justified. Granted, I want you to understand that can happen, right? I need everyone to understand the risks involved. That's what I always used to tell clients on the phone. Company could go out of business, stock could go to zero. Please understand the risks involved. Being in quantum computing, being listed on the New York Stock Exchange means nothing. So please understand the risks involved. But more importantly, as I said, in my opinion, these newer companies that are going to potentially grow in like 2025, 2026, once they build a facility or, they streamline efficiency or manufacturing, or, they just get like 2, 3 big orders and then all of a sudden everything's fine and they have enough money coming in to adjust the cash flow, turn it positive, limit the losses, right? We can say a company like that could be worth at least, a couple of 100 million, or I said maybe the cap, in my opinion, would be about 1 billion, maybe 1.2 billion. Of course, depending on what assets they have on the balance sheet and how much their losses are, right? But right now, QBTS, we have a market cap of about 200 million. Okay, so we're kind of near the lower end of the range of the quote-unquote several hundred million market cap. But more importantly, in my opinion, if this stock wants to stay up here and not pull back to 40, 30, 20 cents, I think, in my opinion, they need the catalyst to come in. They need someone to step in as an investor. They need potentially to receive, I don't know, a loan from somebody, right? They need to, as I compare it to the other stock, they need to land a big contract or some sort of, hold on, because now this is bothering me. Yeah, it was IonQ. We just looked at IonQ. And IonQ, kind of similar situation. I know they're bringing in a little bit more money, but in the numbers, right, kind of rocky. You could make the argument where it definitely could have went lower. No one really knew what was going to happen, where it was going to go, and then what happened? Stock popped. We ended up hearing news about like a $55 million contract coming in from the US Air Force. So that's what I mean. Now, QBTS, granted, if we look at some recent news articles, you'll see that they actually kind of started up their own little, here. dwave announces first ever Qubits UAE 2024, right? And it seems like they also collabed recently with a company out of the Middle East, an AI company. So it seems like right now they're trying to potentially just present this over here in the UAE to try to tap their first, big Middle Eastern order. And then chances are more people will probably follow suit, in my opinion, but they need that big order. But as you see, this is going to be a little event here, hosting the first ever Qubits UAE 2024 quantum computing event in Dubai. Leading consultant development practice AI Qubits will take place on September 20th. Middle East, Africa region. Curated content from dwave's flagship Qubits user conference earlier this year. Qubits UAE will showcase, quote, success powered by quantum today through real-world optimization use cases. Okay, very nice. We're witnessing a remarkable moment in computing. Okay, honored to host. Partnership. We're reading. Is available by invitation only. Interested parties can email them. Could save them millions and allow us to maintain our innovation leadership status. So, all right. So, in a nutshell, in my opinion, this absolutely could be a viable business. Unfortunately, at the moment, we're not having the revenue come in. So this is why, again, I say in a situation like this, if you're talking about a longer, broader term picture, and I'm telling you, man, a lot of people on Wall Street think the way I do, believe it or not. And I know, again, a lot of people are like, well, you kind of have that old school mentality. You don't understand the hype. You don't see, where we're going to be 2 years from now, 3 years from now with this company. And I understand that. But you have to understand as well, you have to kind of try to think as an investor or an analyst, in my opinion, who has wealth. Okay, now I know some people are going to get upset by that, but even you people out there who have maybe like a couple of 100,000 that you built up in an investment account and you're growing it nicely, and 5 years from now you're going to be, who knows, above $500,000, 700,000. You'll hit that million mark, maybe some of you. Unfortunately, that's not really wealth. When I'm talking wealth, I'm talking like at least tens, hundreds of millions in assets under management, right? I'm talking about the players. I'm talking about the institutions. I'm talking about the activists, right? I'm talking about the hedge funds. So, in my opinion, when we're talking about a longer term investment, I feel that it comes more true when you try to look at it through that lens, as opposed to your lens, right? Because your lens technically is, oh, I have 5,000, I have 22 grand, I have 130,000, I'm going to park it into this company, 4 years from now, everything will be fine. And it may work out to where the company does eventually bottom out, stop dropping, all of a sudden positive news comes in, they start beating estimates, and then boom, the stock's off to the races. And you may have positioned yourself correctly. The problem, though, is when we were looking at the actual market capitalization of this business and where we could have gone in the numbers, this is why I kind of initially predicted we could drop to this 60-cent level. And of course, the problem would be talks of a potential reverse stock split and losing compliance with the New York Stock Exchange, which, as we see, is the newest news that has come out. Wave Quantum slips under minimum price threshold, considers options to regain NYSE compliance. Said Friday it received a notice from the New York Stock Exchange that its stock price had fallen below the minimum threshold of $1 a share for 30 trading days in a row. Under New York Stock Exchange rules, the quantum computing equipment and software company needs to increase its closing share price above $1 on the final trading day of any calendar month over the next 6 months. The problem, though, is, if you can get it trending online and get enough small buys and volume to come in, you probably could get it back up to above $1 and potentially regain compliance, maybe just inside of the next month or two. It is possible. But on the flip side, again, looking at the actual numbers, this is why I said in my eyes I was so confident looking for that drop down to 70, 60 cents, because the numbers just aren't currently supporting it. And that right now is the issue, because in my opinion, I think, again, this could be a viable business, but I don't think we're going to really see that growth in stock value until like this time next year, or maybe even longer. Even if we look at the current projections that the company's laying out over the next couple of years. So this is why, unfortunately, in my opinion, I do think that we drop back down and we may have an issue. And we could potentially have a reverse stock split incoming over the next several months. So I want you to understand that and appreciate the fact that that could end up becoming an outcome here with QBTS. The company said Friday it was reviewing several options, including a potential reverse split of its stock to regain compliance with NYSE standards. So obviously that is not good news. However, they do technically have several months to regain compliance. So again, we can turn around, like we said, in a month or two. We can try to get back up above this 109 level and boom, close out the month up here at 115, 118, right? And then all of a sudden, it's no longer an issue for the time being. But definitely just something for you to keep in mind. Boost quantum computing in the Middle East. Looks like that's the go-to market right now, and I can appreciate that. Dubai, we know, is on the up and up. I've heard a lot of pretty good things about the area of Dubai, the people there, the way they do business, the way they conduct themselves. So, you know, they're kind of building like another almost kind of like Manhattan-ish utopia over there. And I can appreciate the fact that quantum computing can potentially play into that equation. And we know that, of course, they have some big money over there. So, you know, buying, you know, some quantum computers and stuff, like, you know, that's a drop in the bucket for them to try to improve the area surrounding, to try to improve Dubai and improve the areas surrounding. So we could potentially hear maybe over the next couple of months about a big order or a big team, a big team up, like collaboration with the Middle East. And I know they mentioned it already. Maintained buy at Roth. Price target cut to 2 from 3. So that's still pretty positive. That's still about 100% move from here right now. Maintain a buy at Benchmark. Price target cut to 3 from 4. Okay, so people are still kind of staying positive on this. Syndicated broadcast, highlighting extended product roadmap. What is this? Today announced it has been featured in a broadcast. Okay. We're going to strengthen its connection between quantum optimization, AI, machine learning. Commercial market. I'm not seeing any timelines. Anytime we have news of them, you know, teaming up or working with someone else, we don't hear. There are no financials disclosed. dwave target maintained with $3 a share by West Park Capital. Sorry, I never heard of you, but okay, $3 a share. Maintain a buy at Needham. Price target from 2.5 to 2.25. So people are still looking at this as a $2 to $3 stock. And these were last earnings right here, roughly 2 months ago, first week of August. We miss. I'm just going to go back and look. Okay, so we were looking for a loss of 7.8 cents a share. The company reports a loss of 8.4 cents a share. Revenue estimates 2.81 million. They report 2.18 million. Missed that mark by about 22.5%. And the issue here is, even though occasionally the EPS losses are less than what Wall Street's anticipating, the revenue has been missing the mark pretty consistently. And you can see 2 quarters ago here, they reported a loss of 7.4 cents. Estimates were 7.5, so slightly better than what Wall Street was looking for. But the revenue came in light again. 2.465 million. Estimates were just about 3 million. So they missed that mark by a little over 500,000, or roughly 18%. Before that, same story. You can see the estimates. We were looking to potentially jump up to the next milestone above 3, now above 4 apparently, Revenue estimates for this quarter were almost 4.7 million. Now, the company came close to 3, but they only reported 2.9 million, missing that mark by about 38% or almost 1.8 million. So the problem is we're just not getting the orders and the actual sales that we need. And I'm sure it could be a slew of things, right? It could be how long it takes for them to get to an issue, produce a product. It could be the price, how much it costs. It could be the sales team, right? We have no idea. But right now, the revenue seems inconsistent. And I appreciate the fact that kind of like this time last year, you can see we were at like 2 million here, 2.4 on estimates of 2.7. But we were bouncing around the lower end of this 1 to 2 million range, right? They bring in about 1.6 million, missed the mark. Then we bring in 1.7, we missed the 2 million mark. Then we jump up to 2.5. And even though we're missing the marks, we're technically slowly inching up this revenue. 2.9 million, then we have a pullback to 2.4, then we have a pullback to 2.1. So I appreciate the fact that the numbers aren't too impressive, but technically they do seem to be kind of slowly climbing up year over year. We're just going to need, in my opinion, the chunk of revenue to come in before there's value here. Because what do I always say, in my opinion? This is why I like to think like the big boys on Wall Street. Because if there is no urgency to step in on this situation, then no one needs to lock up their funds, take a position, and roll the dice, so to speak, right? Here at $1, believe it or not, in my opinion, it's a dice roll, right? When we said it was going to drop down here to 60 cents, that's what I mean. All of a sudden, you see it breaking 63, 58 cents. Then you can step in and potentially roll the dice, start building a position for the longer term. However, you would have turned around in the shorter term and seen that you were up 200 to 300%. So you probably would have taken profits there, especially since there probably wasn't much news coming out on that pop. But if we look annually here, we can see the losses are now accelerating. And coming into 21, coming into 21 for the year, company lost about 41 million, then 53 for last year, almost 83. So even though the word is slowly spreading, and they're doing this conference here in the UAE, it could, translate to future sales. But right now, the company's dealing with an issue here. And I know we like to look at our fundamentals, and we like to look at my personal quote-unquote fair value, the way I look at it. And unfortunately, in the numbers here, it really doesn't look too hot. We have debt jump up over about the last 4 quarters, going from 33 million and change up to above 70, and we've kind of maintained that level. You can see as of last quarter, debt of 72.4 million. Cash on hand right now is about 41 million. So if we subtract the cash from the debt, we're still sitting at about negative 31 million, right? The free cash flow has slightly moved up. For this last quarter, free cash flow sitting at negative 15 million. This time last year, negative 15.5 million. So technically, it's slightly up, right? But it's still really nothing worth writing home about. Assets outweighing liabilities in the short term heavily outweighed inversely in the long term. If we come over and look at the balance sheet, we can see the equity has been bouncing around. The good thing I see here is that assets are back above 60 mil. We were there a couple of quarters ago, even above 70, and then we dropped down to sub 50 and then bounced back. But you can see about a year and a half ago, we were down here $20 to $30 million range on the asset side. Now we're up here 60, potentially 70, right? So we can kind of start chunking up these assets here. The problem is the liabilities are currently outweighing them. Right now sitting at about 83.33 million. Total assets minus total liability yields total equity. Total equity right now, negative 21.5 mil. Current book value, negative 12 cents a share. So you can see at some quarters here, we had big dips down in the book value to minus 20 plus cents. But then we kind of have these rebounds here, minus 6, minus 10. Right, then we start dropping back down into the 20s, and then we spike back up like 50% of that value now. We're sitting at minus 12. So technically, in the numbers, the company currently has negative value, indicating that we can easily drop down to sub $1 again, and we can more than likely go back to 70 cents, 60 cents, 50 cents. It is very, very possible. But because we're at a dollar, kind of sub-dollar and change per share, you could probably have a lot of younger, maybe less sophisticated investors who just want more bang for their buck. And if they have $1,000, they may see this is an up-and-coming quantum computing stock, and it might suck for the next year or two, but in 3 to 5 years, it may work out great. So you know what? Let me just put 1,000 into it. Let me grab like 1,000 shares and change. I have some size, I have some quantity, and we can see where we are a couple of years from now. So I understand that mentality as well. But cash minus debt, as we said, minus like 31 mil. Equity right now, negative 21.5. If we add those numbers up, we're sitting at minus like 52 million. And then we come down here, if we use last year, you can see they brought in almost 9 million, but it cost them over 80 million to do so. So now technically we're sitting at like a quote unquote fair business value of like negative 130 million. So that's why technically even a market cap of 200 million could be viewed as overextended. As crazy as this sounds, we can pull this stock all the way down to about 10 cents a share, which would be $20 million market cap, and it could still be viewed as overvalued, in my opinion, based on the numbers. But again, we don't know what catalysts are on the horizon. So unfortunately, in its current state, I would probably say that I would still sit on my hands and I would wait for a better price. If we see it start dropping back to like the 70, 60 cent range, but there are rumors supposedly swirling that a contract might be coming in. If you want to roll the dice down there at those levels at a 30, 40, 50% discount from this current level, then I can kind of understand that. But again, you may be buying going right into a reverse stock split. That's really my biggest concern here. Because people may want to step in with size here, and you may want to accumulate 5, 10,000 shares of a company. But remember now, if we do a 1 for 1, a 1 for 50, 1 for 100 reverse stock split, now you only have a handful of shares, right? So your initial strategy going into the position as to the reason why you like it is now off the table because of a reverse stock split potentially, right? So again, I'm not wishing it on you. I'm just saying it is very possible that it can happen. But we can see here, Q2, 2.18, right? They missed the estimate. You look at the year before, they brought in 1.7. So technically, revenue is up. 2.5 mil almost for Q1 of 24. We go back to Q1 of 23, about 1.6 million. So these numbers, that's what I mean. Technically, we're growing. Tail end of 22, 2.4. Tail end of 23, 2.9. So technically, and even going to Q4 of this year, you can see estimates slightly higher right now than what they brought in that time last year. So we're missing our mark and not potentially making the sales or coming through with the deals that Wall Street may be expecting. But technically, we are slightly climbing year over year. And this may be a situation where the stock may stay like this, as I said, for the next year, year and a half. And then all of a sudden, you get a big deal, you get a big order. And then, we fast forward and estimates for the quarter might be, 9.5, 11.5 million. But the company comes out and posts like 15 million, 18.5 million, blows it out of the water. All of a sudden, everybody starts piling in because they feel it's undervalued. Now, all those analysts that we just looked at before, now they're upping their price targets as opposed to cutting them. Now they're expecting the stock to go to $8 a share, $11 a share long term, right? And now all of a sudden, we're talking about a completely different situation. Which is why I always say, in my opinion, if you want to eliminate some of the stress and this anxiety, then you should follow the money, you should follow the revenue, in my opinion. But we know right now this is a longer term play, as we said, state of infancy. So I would hope that anyone who's watching this, who owns this or wants to own this, I would hope it's with that kind of little extra speculative money that you have on the side. In my eyes, this right now, I wouldn't make this like a core position in my portfolio. If I was looking to invest into 3 or 4 positions, this right now, technically really isn't in that category, if you will. But you can see throughout 24 going into 25, you can see estimates start to climb now going into 25. 3.5 mil for Q1 of 25. over 4.25 million for Q2 of 25. So it seems like going into 25 and potentially 26 is when we might start to see kind of that uphill snowball effect, to where we can really start to see the stock climb to, $2.50, $3, 360, right? And then all of a sudden we can say, wow, it's up. Wow. Okay. Big siren going by. But, then we can turn around, like a year and a half from now, and we can say, all right, now the numbers are starting to run in. Everyone's looking for, $3, $4, stock sitting at 3.25. All of a sudden the stock's up 200 to 300% over the last 6 months, 12 months, right? Then it's going to be a headline like that that's going to get it trending even more, and you're going to see it run probably to $4 or $5 a share. But it's all up to the company now, right? Similar to something like we said with STEM Inc., perfect example. You got a huge backlog. We think you're going to beat estimates, but then you keep missing by a mile. So until you beat and show people value and give people a reason to buy the stock at that price, then everyone's just going to keep shorting the crap out of it. And it's just going to keep going lower. But you can see for 24, we're expecting to close out the year a touch over 10 million, which technically is lower than 2023. Right? So even if they bring in this number here, 10.5 million, as we said, looking at the fundamentals, technically shouldn't move the stock too much. Going from 24 to 25, you can see revenue expected to double, to go from the low 10s to over 20.6 million. So now that's what I mean. If we approach the tail end of 25 and the company is kind of on the trajectory to beat this number, then I think, in my opinion, what you're going to see is this time next year, people will potentially start piling in, and then you may run into the January effect of 2026. Again, the January effect is after the ball drops and the new year starts, you have a lot of fund managers who look at their positions and reallocate capital. They sell the ones that weren't performing too well, and they'll reposition into ones that will potentially grow throughout that year or into the next year. So that's why something like QBTS, if we can get near that mark, show that growth, show that increase in demand, fire truck going by, show that increase in demand, and then we can kind of be on track to see this growth in 2026, then in my opinion, you may see the January effect. So all of that rant just translated to, in my opinion, I personally probably wouldn't touch this company for at least 6 to 9 months, if not longer, in my opinion. But once we get here above 50 million in 26, expecting to grow to 75 million for 27, then in my opinion, we have to come back to the situation, reevaluate it, because we may be looking at an entirely different company. The losses have kind of been in check, right? We have 4 beats posting more narrow losses over the last 7 quarters. As of last quarter, it was a beat. Before that was as of last quarter was a miss. Before that was 3 beats in a row. And you can see EPS kind of expected to maintain the same losses over the next 4 quarters. And you can see, look, even going to 2027 off 75 million, we're still expecting a loss of 8 cents a share. But the difference is, see, the loss, again, as I say, in my opinion, these newer companies, the losses, while they are important and you don't want to see too much bleeding, it's the revenue that showcases value, which is why something like QBTS, once it goes on a little run, could kind of immediately give it back. And we've seen that over the last year or two. When compared with something like SoundHound, who, even though sometimes occasionally misses EPS, you're constantly hearing about who's tapping them to collab with them, who's giving them an order, who's doing a trial run of their software at the drive-thru. Now we're expanding again from fast food into healthcare. They just acquired that Amelia company. But if you look at the estimates, the earnings, the revenue is consistently growing, and more times than not coming in above analyst expectations. I'm sorry for yelling. I have about 6 fire trucks going by. Something big's going on. But they see the growth. They see the writing on the wall. They see the demand for the product and the service. Other businesses want it. And of course, once you hit that tipping point of going negative to positive, then you're really off to the races. And we can cite something like a Palantir, who showcased that. Regardless of whether we feel it's overvalued in the numbers or not, they do kind of consistently keep getting tapped by other companies. They keep getting new orders. Their, government contracts keep coming in. So, technically, they are doing a lot of things right. And Wall Street sees the demand for their hardware, for their software. That's why there's consistent growth in value. All right. So again, I know I talk a lot and sometimes I go off on a tangent to prove a point, but here it will be more valuable. And again, who knows if they get a big order or whatever out of the Middle East or somewhere else. I mean, we can fast forward to 2027. Maybe the company brings in 120 million for 2027, right? Completely blows estimates out of the water. And this EPS for the year is like minus 1.5 cents, minus 2 cents, instead of minus 8 cents a share. That is huge. Because then Wall Street would be salivating, basically kind of quote unquote knowing that as long as this trend continues in 2028, the company is going to continue to grow in the numbers and potentially go net income positive, which is going to significantly increase its value even more, just like we saw with Palantir. But yeah, unfortunately, I drew out this other trend line here going back because, of course, we're talking about our lovely SPACs. And you can see that right out of the gate, we ran up to, I think, like 1323. Yeah, right there. August 10th. And then I connected it down to that previous top there of mid-July 2023. And it just cut down across. And now you can see that it's kind of a potential support level for the stock right now. And my biggest concern is because the numbers are weak, if they miss earnings here, again, earnings due in about a month from now, first week of November, estimates of a loss of 7.7 cents on a revenue of 2.563 million. So if the company again comes out like in line with the losses, but brings in like 2.1 million in revenue and misses again, the stock can absolutely get decimated. And right now, we technically, excuse me, in the technicals, you can, of course, make the argument, well, we're kind of making these higher highs right now. We have this tightening taking place. I understand that. But where was last earnings? Here, we went down, we went up. But you can see, look at that the apex, excuse me, my apologies. Since last earnings, we've been kind of in this symmetrical triangle, and you can see right at the apex is where earnings are due out. Meaning we can just kind of hang out at the high 90, the low 90 cent range to the low mid dollar range. We could just kind of hang out, and then if the company misses, you're going to potentially see a tank down to like 70 cents. And if we immediately drop on some negative news, or they incurred wider than expected losses, or the timeline is now pushed back, or they're not seeing the demand that they anticipated, right? If we start to hear any negative like that looming, looking at about 43.5 cents, it looks like, down here at this support trend line, where the stock could go. If we do randomly start getting orders coming in and seeing demand, we can most likely pop back up here to the top end of the range, which right now looks like about the high ones, maybe about 190. But if you're looking to break above, again, this is going back from the end of 22. So if you're looking for this to eventually break up and out, you're really going to need some big news. And the big news, as we said, is going to be a random investment indicating a huge cash injection into the company. You're going to need to hear the company get a big order. Something. Or, of course, you can just have people on Reddit just watch it until the short interest goes higher, and then you can just start buying it. But let's check out of curiosity. Yeah, I'm going to wrap this up in a minute. QBTS. Short float, 13%. I actually thought it would be much higher. I thought it'd be like 33%. But not really a squeeze play. Because it just doesn't warrant attention. I'm telling you, that's the way people are looking at it, in my opinion. All right, let's look at stock charts. We've been trending downward, technically just popped and got back above the 50-day moving average, but we got the compliance letter, so we might immediately drop back down into the 90s. If they want to pump it up here off the news, try to make it seem like it has some life with a potential MACD crossing to the upside, you could see a retracement back to the 200-day moving average here of $1.25. But in my opinion, even if it does that, it should technically immediately sell off. RSI 54, so we can continue to keep going maybe off this positive day here. That's why 105, maybe a quick breakout to 110, but it should drop back down. Also, you can see we're starting to get some tightening now in the Bollinger Bands. Last time we tightened, the stock ran up. As we had the tightening here, earnings and the stock started to move. So we do have some potential tightening taking place, so we could maybe see a pop up or, of course, a breakdown. I know some people may view it as, look, we're in a big sell-off, then we bottomed out, and we're kind of slowly stepping up. Again, we're in this kind of symmetrical triangle since last earnings. Apex at around the earnings. You could see a breakup and a retest to 109 and get above that level maybe on the anticipation of the earnings, but if they miss, it's getting destroyed. MACD relatively flat on the weekly. RSI 45.5. Again, we were stepping up. And you can see even in the RSI, if you drew it out, it almost looks like kind of like a rising wedge, right? So that's what I mean. Like we bring it down and then we like channel it up a little bit to retest the level, and then it has to drop because it doesn't have the numbers, in my opinion. And then it'll bounce, we'll bring it up, and then it'll break and drop, right? So you're seeing these steps. But right now, again, technically, big symmetrical triangle. So where is this apex? We're looking like here, which, as you see, could be like maybe first quarter of 25. I'm looking at this bottom trend line, and this top trend line would come here if we extended them, right? And this would be kind of around the apex of our triangle, which, as you see, maybe tail end February, early March 25. So maybe in 4 or 5 months, we could start hearing some big news come out on QBTS after the bull drops. So that's something to keep in mind as well. But in my opinion right now, I don't see the urgency to take a position. And let's check the pivot points real quick. Yeah, I really shouldn't get back up to 149. Let's check the daily. All right, we had a pivot point of 95 cents, which technically we popped above and closed above. However, you can see the last time we kind of bounced off that level and spiked up, we immediately came back down below it. So not set in stone yet. The key level we have in the chart was 109. You can see we have a resistance level here at 110. So we can potentially see a flash breakout here. We'll see what happens. If we happen to break downward, you can see next support level 83 cents and then back into the 60s. So until we get a random earnings beat surprise, or we get news of an order coming in again, or somebody who's planning to place an order over the next couple of months, until we get news or catalysts like that, then I would probably say, in my eyes, just keep an eye on it. And you could probably get it for a more attractive price. But I know some of you got involved. Again, quantum computing, you're pumped about it. You guys may have bought it, all the way back here at $1 and change. And you've just been like holding for a year and a half, just kind of waiting for something to happen. And as we know, it can change overnight. All you need is one announcement tomorrow. All of a sudden, the stock's up to $3, right? So, like I always say, I know they can go up and they can go down, but if you did buy it and you had high conviction, I just want to say, try to stay positive and remind yourself what you saw at the time, where you saw, the growth could potentially go to, what price you were looking for, what you were waiting to hear over the years, right? So Try to remember why you bought it. But again, I will say, if it really struggles to hold that dollar level, and we're now bouncing you over here 60, 70 cents for a while, you may want to consider your options, in my eyes, because a reverse stock split could be incoming. But that's it. I talked too much. I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and enjoy your weekend.